Okay, so very good morning. It is Tuesday the 19th of December. Hope everyone is well. Just going to go straight into the briefing, discuss some of the main things that we're looking at this morning. Possibly have a look at a couple of charts of interest and then some of the associated news and events forthcoming as well. So looking at the general sentiment, let's say, from yesterday, obviously we moved up. You can see here, I was writing in the strategy report yesterday about this kind of pursuit of these big figures on the upside, and we were talking about 2700 in the S&P. Well, I was kind of talking about it potentially for the first half of the week, but we pretty much got there already yesterday. We printed an all-time record high at 97 3/4. So likewise, you saw the Nasdaq broke 7,000 intraday before finishing just below the figure. But fresh all-time highs again in the US indices, and a lot of this nothing to do with any real kind of fresh news. It's just to do with the anticipation that it's looking more likely than not that the both chambers of Congress are going to look to pass through the conciliation of the tax bill. So that meaning that we're looking out for the House potentially to have a vote later today. I'll see if I can get a more definitive time a bit later, and then you have the Senate possibly tomorrow, if not then Thursday. And therefore, lo and behold, this fella here, I don't know if you can see that in my camera, I'll wiggle his head a little bit, this chap has delivered on the first major concrete piece of legislation that he's put forward since he's come in. Just over a year later. So, and obviously this is a positive. It's not just about the tax bill. This is about forward thinking into 2018. And I didn't quite catch the story, but I did hear on TV this morning there was some sort of rail incident in the US that I think has happened last night. But Trump using this as just another reason that we should be really focusing our efforts and money next into improving America's infrastructure. And so that's obviously a big push for 2018, that alongside the whole regulatory front for the financial sector. So obviously the more sooner he can get this done, the more sooner he can start dealing with other measures. And then they all start to stack up, and consequently this is when you start talking about a decent lift to people's expectation about forward looking for the US economy. On that front, a little bit related I guess, I did send this article out to you guys this morning. Just the headline caught my eye, Goldman Sachs. They're looking at the fact that the mammoth tax package coming in the US will add pressure on Asian central banks to tighten while aiding the region's exports. So the tax bill will probably be approved and should support Goldman's outlook for Asia in the coming year for sustained solid growth, inflation coming off low levels and interest rate increases in most regional central banks. So just looking at a bit of an Asia Pac read across. And this is important because this is one of the key things here, is that this movement which we had particularly yesterday, because it wasn't just the S&P, the DAX also followed suit. So European equities fairly light on single company news, but we saw a quite powerful move higher in the DAX index as well. We broke above the levels that were seen really at the beginning of last week, and therefore we got up to test and maintain pretty much where we are at the moment, this previous point of which in the futures market, on that gap that we had really at the end of October, the commencement of trade for the month of end of November, the commencement of trade for December. So at that level, that's 13,310 I'm looking at here in the futures. And we still sit and hold on to those gains. So more so it's to do with, I guess, a rising in sympathy with the fact that US equities, if they perform so well, there's a general global read across then for risk appetite. Underlying that, though, is the fact that economic data, obviously in Germany specifically, has been incredibly strong. We've had the PMIs just last week, multi-year highs, if not record levels, and then we're going to be looking out for German IFO later on today, and I'll be expecting that generally to fit that narrative of positive European performance. And probably what's helping this equity market as well is, if you think about what the ECB was saying, there's no real policy change coming from the ECB for the time being. If you remember in the press conference, questioned about when QE is going to end, Draghi was pretty much definitive in that conversation's not even happened yet, never mind debated. And so that kind of dovish reaction that we saw in the press conference, with a general economic pickup that is occurring in nations like Germany, is a bit of a Goldilocks scenario. You've got low interest rate policy in combination then with an ever-improving economic situation, the political uncertainties. Obviously, we've had now confirmation of the Austrian situation, Kurz teaming up with a more far-right partner. There's still impasse, if you like, with the German coalition situation, but none of this is really factored in as seen as a major risk. Likewise, you've got the Catalan election this Thursday, but again, I think markets are fairly calm about that situation, at least for the moment. Whether that was complacency or not, I guess we'll find out on a little bit more on Thursday. But markets tend to be sensitive to these events going ahead, and things have remained relatively calm. So we're still up at those levels in the DAX. I'd say from here, what would be quite interesting, I think, looking at the charts this morning, would be if we get a bit of a pullback down to this kind of level. Be interested maybe then of considering another long position, that being the favoured bias. I think going forward, the only risk to that is going to be if this US tax deal collapses, which I think is a minimal risk at this point, but certainly still a plausible scenario. So whether I'd want to be getting aggressive, looking to get in here and push it up to the respective R1 and 2 today, not so sure. I think I'd be more comfortable if we get a bit of a pullback than at this previous level, kind of, I guess, here and where we were before we gapped, which was this point here, would look more interesting than at that point. So it's the kind of equity mix, if you like, of things that have been going on. Having a look at a few other things, certainly the pound had a pretty interesting day yesterday, and it's been a little bit lacking of direction, I would say. That's the best way to describe the last week. Looking here at the March contract, so really just to map much of December. So this is the month to date, so to speak. And if we just look at the broader range that we've generally been trading in, we're pretty much right bang in the middle of that. And so we had on Friday a bit of a collapse. This is a combination of some resurgence of dollar strength, a little bit of uncertainty still about how these talks are going to progress on the Brexit front. But then we recovered quite sharply yesterday. Now, Theresa May was speaking in Parliament. She was talking about this push for a what would be called a bespoke deal for Britain. However, what happens when Theresa May talks up her strength to negotiate Brexit? Well, Europe fire back quite quickly. Barnier out overnight, hardening the Brexit line as May's ministers inch toward unity. So the union chief negotiator Barnier set out a hardline negotiating position, used an interview with the Guardian newspaper late yesterday to rule out a special carve-out for the UK financial services industry, and warned Britain will have to abide by any new rules drawn up by the EU during a transitional period after leaving the bloc. So any positivity that might have occurred from her commentary from yesterday has been mitigated, if you like, by those comments. Just having a look at what was really a key level that broke yesterday was, well, we were really looking at that low, which was the low point of the afternoon on the 14th, so that would have been last Thursday. And then just looking at that previous high that was seen on the 12th as well, which has provided a little bit of support in the overnight Asia Pac session to then lift back up to that previous Thursday low point is where we are at the moment. So I guess we need to be aware of monitoring this Brexit situation. It's really Wednesday, I believe it's the EU Commission outlining their directives for the Brexit talks. That's not happening until tomorrow, so not looking for too much today on that regard, but of course something to just keep in mind and to monitor, but nothing really too interesting there technically at the moment. But looking at the Aussie dollar, that does look a little bit more interesting. And I know a couple of the guys here do look at the Aussie quite closely. We've had a bit of a breach here of yesterday evening's or late afternoon high at 76.74, and we've managed to push up and test at R1 here. So a couple of the guys were looking at the potential short this morning, just given this previous point of resistance. However, I would say, as ever, you've got to be aware of the fundamentals, and really that short didn't look plausible in the context of the fact that iron ore is out on an absolute tear at the moment. Now, this is the new reality in the world that we live in. While Trump is bigging up fracking and slashing government funding for the environmental department, China is saying we want a more clean environment and we want a better planet for everyone. So you've not woken up in an alternate universe. That's right, your new backers of environmental change are China, it seems. And so as part of this political agenda to clean up the sector, so to speak, through tightening of regulation, iron ore is on the rise. So the environmental cleanup in China, tightening the supply of higher grade material that's less polluting and allows steelmakers to maximize production. So Dalian futures, which is the main kind of benchmark measured in China, jumped the most in a month as Singapore prices climbed. So definitely worth keeping an eye on this going forward if you're considering any trade in the Aussie. Keeping in mind though that this has been priced in now, some of that movement that we're seeing overnight, and prices have already moved higher. I guess the question mark from here is, does this provide a bit of a floor for a potential classic long if you can get in there? Maybe it takes, I mean, the R1's not that far higher though, so maybe if there was a multiple contract entry to be in some at taking off at R1 the futures with an ultimate target of the high that was seen on Friday morning up at 76.91, kind of scaling out as we go, could be an appropriate play to tackle the Aussie for this morning. Keeping in mind what's also probably to help the Aussie momentum on the upside, that's the iron ore situation. But crude oil is higher and gold is higher, albeit moderately. But if this commodity move is moving across all of the different kind of sub-metals, if you like, so precious and industrial metals moving in the same direction, this certainly should be favourable for the Aussie move. So here we are, we're just testing R1 now in the currency, so definitely to keep an eye on. Does look quite interesting in the way it's set up this morning. Okay, let's have a look at the calendar. We've got German IFO coming up, so ideally I'd want to wrap this wrap. I want to conclude this wrap as promptly as possible. So let me just bring in IFO. This is the main economic data point coming up this morning. And so one thing to keep in mind, the IFO report is probably one of the most important economic data points out of Germany. But what you need to do is, of course, take this in context. Now, by this, what I mean is twofold. For one, the reason why it's important is because this is a survey of companies across industry within Germany, of both present and forward-looking expectations of the economic environment. And so certainly this is an important forward-looking soft indicator that participants monitor. The one thing you need to keep in context though, if you look at IFO, the last figure that we had, we printed at 117.5. So to put it in a different way, if we were to look at this data going back on a max chart, this is the all-time high. This piece of data has never been higher. And so, you know, this is one thing you need to factor in, is the market is used to strong German IFO data. So if we get an equally strong number, which the market consensus is for it to stay the same as last month, I wouldn't be looking for all of a sudden a big powerful move in the euro, big jump in the DAX. Is probably not going to happen. I would say the bigger surprise would be if we got a drop off and an absolutely weak number. That would be a surprise, because German economic data generally, economic sentiment in Germany has been relatively strong and robust. Well, not relatively, it has been strong. So that's the way I'd approach that. Unless this is a bad number, I wouldn't be looking for a great deal out of in terms of market movement. Looking further forward into the afternoon, you've got building permits, housing starts coming out of the US. This is your 1:30 data. As per usual, I wouldn't be looking for too much out of the housing data from the US. It really is not a focal point of policy at this point. One thing, talking about the housing sector though, to put it again in some context for the present situation, we had the US NAHB housing market index yesterday. Home builder confidence in the US, the highest since 1999. So, sayonara subprime crisis. We are back on in regard to the US housing situation. So that's not really a sweet spot for policy making, so I'm not expecting much from that. One of the things I'll keep you updated on, of course, will be this House vote, what time that will happen. I would imagine London time is going to be later this evening for when we get the House say and vote on the tax bill, which is probably going to be the more defining factor. Later on, aftermarket, API crude oil inventories as per normal, so that's the other thing to look out for. Okay guys, going to wrap it up with that, because we do have the data coming out momentarily. So one thing I'd keep an eye on is we have seen a little bit of a renewed move here in the US equity market. So we've just had a bit of a retest up at 26.98 here in the S&P. So this positive sentiment still holding for the time being. Looking at the Dow, likewise, we're not too far as well from that previous high from yesterday, so worth keeping an eye on those levels. Okay, German IFO coming up. 4 minutes. Have a good day.